SPY, the ETF for the S&P index, $685 billion in assets under management. And I'm here to show you exactly why those people are so wrong in trading this ETF. Stay until the end. At first, I'm going to show you why you shouldn't be trading it. And secondly, I'm going to show you what you should be trading instead. Stay tuned. Let's jump right in. So first of all, I'm going to start with the good on SPY. It has daily expirations when it comes to options. And that's kind of cool because you can trade it today and have it expire today, or you can trade it today and have it expire tomorrow. So you have a lot of choices there, and that's pretty good. But let me jump right in and show you the math on it on why you should not be trading this particular ETF. So first of all, the price tag on this ETF is $677 per share. Oh my gosh, what does that mean? Well, let's just go to the basic fundamentals first. Two strategies you need to know: sell a put, sell a covered call. Now, if you're selling a put on this particular ETF, you're promising to buy 100 shares at the strike price. And since it's trading at $677 per share, you are literally putting up $60,000 or $67,000 in capital. That's a lot of dough for one trade. Also, the volatility on SPY is very, very low. In fact, it's usually in the 20s. Now, here's how you want to look at volatility. Volatility is how much swing the particular stock or exchange-traded fund has. And when it has a lot of swing, you get a lot of premium for the risk that you're taking. When you have a small amount of swing, you don't get paid that much money. I'm going to walk you through the math, showing you the calculation right on this screen. So let's go through an example. Like I said, SPY closed on Friday at $677 per share. We're going to look at a $673 put that expires tomorrow. Now, that contract closed at $96 on Friday. So you might be thinking initially, wow, I can get paid almost $100 just for one day holding. And that sounds pretty good, but you want to walk through the math. Let's do it together. Okay, so if you're collecting $96 in premium, we're going to divide 96 divided by the capital that we have to put up to make this trade. Now, like I said, we're looking at a $673 put, so we're putting up $67,300. A lot of dough, right? $96 divided by 67,300, that's a rate of return of 0.001%. If you did a trade like this each and every single day that the market was open, you'd make about 36%, 36% on your money. And before you say, Michelle, that sounds pretty good, let me explain something to you. When you sell a put, if the stock price goes below the strike price, you're committing to buy 100 shares. So again, you're locking up $67,000 in capital. Now let's just also compare an SPY contract that expires on Friday, because I want to show you an alternative to SPY, and I want to calculate apples to apples so you can see an exact comparison, and then you can make the most educated decision as to what trade you think is better to take. So I'm going to look at a $670 put that expires on Friday, October 31st. So you'd hold the contract for about 1 week. Now that contract last closed at $259. Sounds like a lot of money, but again, you're putting up $67,000 to make this particular trade. Now, by the way, this particular contract has a 29 delta, meaning it has an approximate 29% likelihood that SPY will drop below $670 before it expires on the 31st of October. Now, if we calculate $259 in premium and we're putting up $67,000 in capital, well, that gives us a rate of return of 0.003%. Now, that's for 1 week. So what we want to do is we want to annualize that rate of return out. So we're going to multiply that times 52, and that gives us an annual rate of return of 20%. And again, you might say, Michelle, that sounds pretty good. I don't mind making 20% of my money. But again, remember, you're putting up $67,000 in capital. Now let's look under the hood of SPY, shall we? The biggest holding of SPY is Nvidia. Why not just trade Nvidia? Let's walk through a Nvidia trade instead of SPY and look at how much you have to commit to make that trade and what your annualized rate of return would be on that one. Now, Nvidia closed on Friday around $186 per share, so far, far less expensive than SPY. Number one, right off the bat. And we're going to compare apples to apples. So I'm going to find a similar Nvidia trade that we can compare against SPY. We're going to look at a $180 put that expires the same October 31st. And that contract last traded on Friday at $185. Here's a reminder for what that means, guys. When you sell a put, you're collecting premium and you get to keep that premium no matter what. And you're committing to buy 100 shares of that particular stock or ETF if the price drops below the strike price before the contract expires. The 180 put, by the way, has a delta of 27, so it's pretty similar, meaning it has a 27% approximate likelihood that Nvidia will drop from 186, where it's trading now, under 180 before it expires on the 31st. Now let's calculate that annualized rate of return. So we're going to take our premium that we're collecting, $185, and we're going to divide that by the capital needed to make the trade. In this case, it's only $18,000 because we're looking at a $180 put. Now that gives us a rate of return of a little more than 1%. But again, we're only holding the contract for 1 week. So we want to annualize that figure out and multiply by 52. Now that gives us an annualized rate of return of 53%. So here's what that means, guys. We can trade SPY and tie up $67,000 in capital and make $259. Or we can trade Nvidia, which is the biggest holding in SPY anyway, which is kind of hilarious, and only tie up $18,000 in capital. Now you're making a little bit less because you're taking in $185, but you're putting up far, far less in capital. So if you wanted to, you could, if you wanted, trade 2 contracts or 3 contracts to make more money. The number of contracts that you trade really depends on the account size that you have and also what other holdings you have inside of your account. So anyway, I think that's a great comparison between SPY and Nvidia. Let me know in the comments, what do you think? Do you think SPY is the better trade, or do you think Nvidia would be the better trade? What tickers are you trading? What tickers do you want to see me do a video on next? Be sure to subscribe. I'm literally putting up a video each and every day, and my goal is to hit 1,000 videos over 1,000 days. Anyway, hope that helps. Happy trading.